So the next chapter is audit report. So in this chapter, we are going to understand how to prepare the audit report, nothing but. You have this chapter earlier, you have this chapter in the CA Inter. See, this is not just like, reading and trying to remember nothing. You need to understand how the report has to be prepared. Tomorrow, when you go for articleship, they'll ask you, see, ultimately, what is the purpose of doing audit? To give opinion, correct? The ultimate objective of audit is to give opinion. Whether financial statements are free from material misstatements. How do we give opinion? Through audit report, correct? Audit report is a document through which ultimately we give opinion. Now you see, in this audit report, this is the content that we are actually going to cover. These are the topics that we have in audit report. The topics we have is these standards we have. We may not be discussing 100%, but we will be discussing majority. Getting it? Now, what is the format of audit report? That is the first thing that we need to understand. So, what are the contents of audit report? What are the points that will be there in audit report? That is the main thing. See, you are learning nothing but in this chapter. What is our learning outcome? After learning this chapter, you must understand how to prepare an audit report after performing the audit. After you got the evidence. Getting it? How to get the evidence? We have a chapter called documentation and evidence. How to apply sampling? We have a chapter called sampling. How to do substantive analytical procedure? We have analytical procedure chapter. How to verify assets, liabilities, purchases, sales? We have items of financial statements chapter. Correct? After doing all this, finally what will you do in a company after verifying all the things? You finally get some conclusion. And after getting the conclusion, how to give opinion? That is what, right? This is the standard which is dealing with how to give opinion. So now you see, what are the contents of audit report? Any report will have a title, yes or no? Any report will have title. So audit report is also having title. Getting it? So the title of the audit report is what? What is the title that we must use? We must use the title called Independent Auditor's Report. We must use a title called Independent Auditor's Report. That's it. See, it is very clear indication that we are independent auditor and this is a report containing our opinion. Then addressee. To whom we address audit report? To the members. To the members of the company. In case of government owned companies, central government owned companies, we address to C&AG or we may address to President of India. In a state government undertaking, a state government owned company, we address to governor. Like suppose you see Tamil Nadu Power Distribution Corporation Limited, TNPDCL, from where you get electricity bill. Yes or no? They are the one who are supplying electricity, distributors. And that's a company limited by shares. And who is the major ownership in that company? Tamil Nadu government. So it's a state owned government company. Bharat Petroleum Corporation Limited, that is also a company. But in that, major ownership is held by whom? Central government. That is central government owned company. Anyhow, both are government owned companies, both are called as public sector companies. Are you getting it? Now, addressee to the members, generally to the members. In case of special purpose financial statements, we may give to addressee to board of directors. Next. The ultimate thing that we require to give in audit is what? Opinion. So we need to give ultimately what? Opinion. Now how to give opinion? What are various types of opinion? That is the thing that we will have to discuss in this para. Are you clear? In audit report now, these are called as sections. Opinion section. Basis for opinion section, or it can also be called as opinion paragraph. Basis for opinion paragraph. You see, this is a separate section, this is a separate section in the audit report, correct? Section means not Law Companies Act section. Section means what? A part of it. Able to understand. In this table I divide it into two sections. One section I will use for some purpose, one section I will use for some purpose. Section means what? Part. Able to understand. So, part or para or section, anyway you can call. But in the entire standard, how these were referred as? They were either referred as sections or they were referred as para. Both means the same. So opinion para or opinion section. Next one, basis for opinion section. Now tell me, if I give a positive opinion, I'm saying entire financial statements of the company are true and fair. I gave an opinion that financial statements of the company showing true and fair. I gave a positive opinion. Will I have any specific reason why I gave a positive opinion? Will I have any specific reason why I am giving a positive opinion? Generally, no. Then how did you give opinion? What is the basis? They're asking what is the basis? You gave opinion, no, what's the basis? I did audit as per standards. Getting it? So likewise, I will mention something. We'll discuss later. Getting it? In-depth point we'll discuss later. So we mentioned that. But when I give a negative opinion, will I have a reason or not? Generally, why financial statements are showing true and fair view? There are so many things. Why I am giving true and fair positive opinion? There are so many things. But when I am giving negative opinion, I have a specific reason. Correct? I have a specific reason. So basis for opinion contains that. Then key audit matter. Then remaining is what? Material uncertainty related to going concern. If you look at the format which we are discussing is covered under which standard? 700. This format of audit report is contained in which standard? 700. If you look at 700, these 4 points will not be there in the ICA material. Getting it? But I gave in the format of audit report here. And you see right side what I mentioned, applicable as per relevant standard. What does that mean? These points will not come in every audit report. You see, that's why I highlighted with a different color. When they will come in audit report, if applicable, it will come. If not applicable, that's it. Are you getting the point? If I want to give material uncertainty para, then it will come. If I want to talk about key audit matter, then it will come. Emphasis other matter, if I want to talk about, then it will come. Are you getting the point? If I don't have to discuss any of this, what is the previous para basis for opinion? If I don't have any of this, straight away next para will be. Exactly. Able to understand? Then in the audit report, we are mentioning to all the shareholders what are the responsibilities of management. They are responsible for preparation of financials. They are responsible for running this company. All that we will mention. Whatever you learned in preconditions to audit, no, all those points we will mention. Then we will talk about our responsibilities. Auditor responsibilities, we will mention so clearly what are all our responsibilities. Do we need to get absolute or reasonable? That only we will mention. We will mention that we are only liable to give reasonable assurance, but not absolute assurance. All these points we will mention. Next. Then we have something called other information. This standard we don't have in our syllabus. Not in syllabus. This information, this para is not in syllabus. Remember, other matter paragraph is SAA 706. Other information paragraph is SAA 720. Both are different. 720 means other information. Other matter para means SAA 706. For us, which is there in our syllabus? Other matter para is there in our syllabus. This is not in our syllabus. Getting it? So this will also apply as per the respective standard. Understood or not? Then report on other legal and regulatory requirements. So you see, now there is a title, addressee, opinion, basis for opinion. So much you are giving. In addition to that, you are giving additional report. You are reporting on. You are reporting on means you are giving information on what? Legal and regulatory requirements. Regulatories means what? RBI, IRDA, SEBI, TRAI, Telecom Regulator. These are regulatories. If regulator is asking you something to report in audit report, then you have to report them. Suppose RBI has prescribed 4 points for banks, that the bank auditor shall report on these 4 points. Getting it? The bank auditor has to report on 4 points. Likewise, RBI has given an instruction. Then we will report. Companies Act. Legal requirement means what? Companies Act. Companies Act gave us some requirement that we should report. 143 subsection 11 CARO 2020. All 21 clauses should be reported in audit report under which paragraph? This paragraph. Able to understand? CARO is not something different topic. CARO is what? Part of audit report. It is part of audit report. Inside audit report, under the last part of the audit report, we will give caro. Are you getting it? So caro is not a separate report. Caro is not something in topic. It is nothing but a reporting requirement. Whatever points mentioned inside the caro, on all those points, we have to comment. We have to give our opinion. Are you getting it? We'll discuss how to remember 21 clauses. Don't try that. Not required in exam. They will not ask you, tell me 21 clauses. Getting it? They will ask you, what are the aspects that you verify? What are the aspects that you verify relating to immovable property in case of fixed assets? This is the question they'll ask. And you don't know that. Able to understand? You only know headings, not the matter inside that. You are trying to remember what will not be tested. But you are not at all reading what will be tested. Getting it? So, that also we'll discuss clearly. Then finally auditor will sign, where he signed, date. So all these are the contents of the audit report. Then after UDIN number, we'll discuss that. So this is the content of the audit report. Now each and every segment we need to understand. Able to understand, all of you? Until now got a brief idea? Next. Now we need to discuss opinion para and basis for opinion para. First of all, remember, we are now discussing actually SAS 700 related content. What is SAS 700 related content? Forming of an opinion and reporting on financial statements. First, how to form the opinion and how to report on financial statements. This is the discussion. Now, tell me, how many types of opinions we have? In the previous sessions also we have covered how many types of opinions that we can have. Opinions can be broadly two types. Positive opinion, negative opinion. Either you may have a positive opinion or you may have a negative opinion. Now, in auditing, we are not using these words. We are using the words unmodified opinion, modified opinion. Instead of using the word positive, negative, getting it? Unmodified and modified. This is the terminology that we use. Now tell me, suppose, by the way, my positive opinion, when I am giving positive opinion, what do you mean by that? Company is performing really well. Directors are working super. Is this the reason? Is this positive opinion meaning? What is positive opinion? Financial statements are showing true and fair picture. What's the difference? Financial statements, companies actually in losses. Completely losses. Worst performance company. But they honestly disclosed everything. They honestly disclosed their worst performance and worst position. They disclosed honestly. So which opinion you'll give? Unmodified. Nothing but positive. So, auditor's unmodified opinion, positive opinion, clean opinion does not mean company is performing well. Positive opinion means what? Company books of financial statements are showing the real picture. Suppose company is excellently really performing well, superb. But company financial statements are showing worst performance. Actual reality is company is performing well. But management manipulated entire picture and showing companies actually having losses. Which opinion you will give? Modified, nothing but negative. Financials are not true and fair. They are not showing true and fair. Able to understand. So, if financial statements, you appointed me as an auditor to check the balance sheet P&L, I saw, I inquired background data, everything is right. So, I'll give everything, I will mention everything is right. If something is wrong, I'll mention something is wrong. If everything is wrong, I'll mention everything is wrong. Are you getting it? So when our auditor will give unmodified opinion, tell me, simple, financial statements are prepared by the company, board of directors. I was appointed to do the audit. So I took balance sheet P&L. I saw entire that fixed assets, current assets, breakup, records, physically verified, bills, books of accounts, supporting invoices, GST books, GST copies, everything I verified. And I felt whatever balance sheet P&L numbers, presentation, classification, disclosure they are showing, I felt everything is correct, does not require modification. They don't require any modification. What do you mean by the balance sheet P&L does not require any correction? What do you mean by that? Balance sheet P&L doesn't require any correction at all. That's what I'm telling. What does it mean? Balance sheet P&L are showing correct numbers. They are showing correct information. So which opinion I'll give? Unmodified. They don't require any modification. That's why I'm giving which opinion? Unmodified. I will also not modify my opinion. I have positive opinion. I'll give the same. I will not modify because they don't require any modification. Suppose if balance sheet P&L contains mistakes. If balance sheet P&L contains mistake and company want to issue the same balance sheet P&L to public, which is misleading, which is containing misstatements, what should I tell company first? Please modify the numbers because they are wrong. The balance sheet P&L is showing wrong picture. Please modify, I'm asking. Management said, no, we will not change. This is final. This is what we will send to public. Do whatever you want. Okay, they will not rectify. They will not modify the financial statements which require modification. They are not modifying. Then what will I do? I will modify my opinion then. Able to understand the terminology, how they came. So I will modify my opinion. Now, that is what definitions were given. Unmodified opinion. What is the definition? You know, if auditor concludes, if auditor decides, concludes, based on sufficient and appropriate evidence, based on sufficient and appropriate evidence that the financial statements prepared in all material respects according to applicable framework, then the auditor will give unqualified opinion or clean opinion. Able to understand? So what do you mean by unmodified opinion? What it indicates? When auditor gave unmodified opinion, what does it indicate? Does it indicate company performance is good? Does it indicate company is excellent? No, it indicates auditor got evidence, financials are disclosing all information, accounting policies changes are properly accounted, and financials are prepared as per applicable framework, accounting estimates are reasonable, management is doing business with prudence practices. Yes or no? This is what actually it implies. Are you clear? That's it. Now when auditor will give modified opinion, two cases. Okay, before that, let us check here below. Now let us check what are the different cases. You know, modified opinion is again divided into three types. Modified opinion, the standard classified as three subtypes. One is qualified opinion, adverse opinion, disclaimer of opinion. It's DOO. Disclaimer of opinion. Here what am I saying? I don't give opinion. Disclaimer of opinion means what? I don't give opinion. It's not opinion. I am disclaiming, I am denying to give opinion. So denying to give opinion is also a type of opinion. Having no opinion is also an opinion. Are you getting it? Now, how and which cases the auditor will give which opinion? Let's look few examples. Getting it? Now, take a balance sheet of the company. Take a balance sheet. The company is having fixed assets. Okay. Gross WDV is this much. Accumulated depreciation. And this is the net WDV. Then the company is having current assets, which is around some. The current assets, they are having breakup. Trade receivable 100 crore. Inventory 100 crore. Cash and bank balances some 100 crore. Totally 300. Totally the balance sheet is 700 crore. Let us assume. Now equity and reserves and surplus. This is approximately 500 crore. And outside liabilities are approximately 200 crore. So this is the number. Rough numbers of a balance sheet of a company. A brief overview. Now in this balance sheet, there is one trade receivable. There is one customer. From whom the outstanding amount was some 10,000 rupees. This is 100 crore ma. There is one customer from whom there is an outstanding amount 10,000 rupees. It's actually doubtful. It's actually doubtful. But company did not created provision. A company has to create a provision, but they didn't create. I have evidence that it is becoming a bad debt, or it is actually a bad debt. But company did not treat it as bad debt. Is it a misstatement or not? Yes or no? Misstatement or not? Yes. Now, which opinion I'll give? Remaining all are correct. Remaining all are correct. These are all correct. Even remaining part of the trade receivable is correct. Only this 10,000 I have a problem. Which opinion I'll give? Dear shareholders, don't believe this balance sheet. People, company cheating you. Can I select this? Which opinion I'll give? Unmodified. Why, sir? This is 10,000 is immaterial. This is immaterial. Out of 100 crore, 10,000 rupees is how much immaterial? Out of total balance sheet 700 crore, 10,000 rupees only I am having a mistake. Only for 10,000 there is a mistake. There is a, negative thing. Apart from that, everything else is true and fair. So I'll give which opinion? Unmodified opinion. What if this number is 1 crore? Modified, fine. Inside modified, which one you will give? Qualified opinion means what? Everything is correct except so and so. Adverse opinion means as a whole everything is wrong. Now here all these items are right, but 1 crore worth of misstatement is there. Is 1 crore material or immaterial? Material. Mistake is there. But can I say entire balance sheet is misleading? I cannot say. I cannot say entire balance sheet is misleading. Can I say as a whole balance sheet, don't believe this? I can't, because I have evidence for all other items. Everything is correct. Only this 1 crore mistake I discovered. Are you getting it? Now which opinion I'll give? Qualified opinion I'll give. Able to understand. What if this is 10 crore? What if this is 10 crore? 10 crore worth of doubtful debt. 10 crore worth of doubtful debt is not, they are not showing properly. It's actually a bad debt. It's actually a bad debt. Now tell me, is it a material mistake? Yes. Now tell me, 10 crore means current year profit of the company is 7 crore only. Current year profit of the company is how much, 7 crore. Without charging of this bad debt. Without writing of this bad debt, current year profit is 7 crore. Actually, if at all the company created provision for this bad debt, there is no profit. It's actually loss. But because of ignoring this mistake, entire result is misinterpreted, correct? Actually, it's a loss-making company. But people are thinking it's a highly profit-making company. A company is having so much, very much good profit, they are thinking. Is it correct? So, which opinion you'll give? Qualified or adverse? Adverse I'll give, because this is changing my overall view about the company. Able to understand? Something which is fundamental to the user, I'm not understanding. My opinion on this entire company will change. If at all this bad debt is charged, getting it, I may feel that this is completely misleading, P&L account. Without charging bad debt, there is 7 crore profit. After charging it, there is 3 crore loss. So, as per auditor point, if at all this 10 crore provision is created, company is actually having loss. Now, as a whole, the balance sheet P&L misleading or not? I will treat it as not only material, but also pervasive, not persuasive. Pervasive. Pervasive means I feel this is as a whole impacting. Are you getting it? Some auditors, 10 crore out of 700 crore is also not pervasive. They may feel like that. Some auditors may still give which opinion? Qualified. Some auditors may give which opinion? Pervasive. Remember, what they will feel pervasive, what is material, is a matter of professional judgment. What I feel material, you may not feel material. What I feel pervasive, you may not feel pervasive. So here in this case, if it is me in that position, if this is the result of the company, if this provision is charged to the P&L, entire P&L image is changing. So I will consider that's why pervasive. Able to understand? It is giving entirely a misleading picture. That's it. Are you clear? Next another example. Suppose, now you see, we are only focusing on misstatements. Misstatement, immaterial, material but not pervasive, material and also pervasive. These three types we have seen. If the misstatement is immaterial as a whole, which opinion will give? Unmodified, unqualified opinion. If mistake is material but not pervasive, qualified. If mistake is material and pervasive, we will give adverse. Able to understand? Next. Same fixed assets is approximately some 100 crore, accumulated depreciation some 400 crore, trade receivable some 100 crore, inventory some 100 crore, cash and bank balances some 100 crore. So total 700. Getting, and liabilities from 200, equity, reserves and surplus some 500. This is a balance sheet. In this balance sheet, trade receivable, there is some 10,000 rupees worth of debtor. Okay. I sent him external confirmation. I sent him external confirmation, but I didn't get reply. He didn't confirm me. Now tell me, do I have evidence or not? No. I want to get evidence from him that is he really liable to pay to the company 10,000 or not? I want to get an evidence. I sent it to so many debtors, everyone replied, but this fellow is not replying. I tried to reach him, not available. Getting it? I tried to get evidence, alternative method, not possible. Ultimately for 10,000, I did not get evidence. For all other remaining items, I got evidence. For all other remaining items, I have received evidence. For this 10,000 only, I did not have evidence. Now tell me, 10,000 rupees worth of item, I don't have evidence. I will not give opinion on this balance sheet. Can I say that? Why? Because the 10,000 is immaterial. Have you got evidence for all material items? Yes. Then you can give opinion, no? Why you are worrying about immaterial item? Ignore it. So we will give which opinion? Still unmodified. What if the debtor value is not 10,000 but 1 crore? Same situation. What if the debtor value is 1 crore? 1 crore worth of outstanding balance with a customer. I don't know whether it is really there or not. I don't know whether 1 crore is really liable to pay or not. I don't know. Getting it? If I see the sales document and all, it is saying that he has to pay. But when I want to trace him, he is untraceable. Ultimately, 1 crore worth of debtor, I don't have evidence. But remaining all other items of balance sheet P&L, I have evidence. Remaining on all the balance sheet P&L items, I have unmodified opinion. But on this 1 crore, I am not able to give unmodified. I am not able to give unmodified. So which opinion I will give now? Qualified disclaimer. Qualified. What will I say in qualified? 1 crore is materially misstated. Can I say that? How can you say it's a misstatement, man? Misstatement means what? You must have proof. What company did wrong in this? 1 crore, I don't have evidence. If you don't have evidence, say that you don't have evidence. How can you say this is wrong? Are you getting the point? If there is no evidence, how can you say it is materially misstated? In the previous example, it's a bad debt. I have a proof. Customer is already insolvent. I have a proof. It's a bad debt. Clear cut. So I can say company is still showing it. But here, you don't know where the customer is. You didn't talk to him. How can you say 1 crore is materially misstated? How can you say this is a mistake? First of all, do you have information to say this is mistake? No. When you don't have information, how can you comment on this? So give your opinion on the rest of the balance sheet P&L except this. Are you getting the point? Except this, give your opinion on the rest of the balance sheet. Our rest of the balance sheet is true and fair except qualified opinion only. Previously, after except word, we will say that the debtor is materially misstated. But now, we are unable to obtain except that with respect to 1 crore, we are unable to obtain the external confirmation with which we are unable to comment on the recoverability. Understood. We are unable to comment on the existence. Clear. Not having evidence means you cannot use the word misstatement is there or not. You don't have evidence first of all. How can you judge is it right or wrong? When you can check it is right or wrong, if I have evidence, I can say right or wrong. If I gave you phone and asked you to give your opinion, after operating sometime, you can tell, is it performing better or not? I didn't give you the phone itself. I'm asking you, tell me your review. How can you give? Able to understand. If I did not give you the phone and asking you to give review, can you say the phone is working bad? Exactly. How can, when you say financials are materially misstated, you must have proved that it is mistake. When you are saying it is misstated, how it is misstated? Tell me, show me. Here I am asking you 1 crore, how it is misstated? Show me the proof. No, it is not misstated. I can't say on that. When you can't say on that, say that you can't say on that. Are you getting the point? All of you. What if this is some 10 crore? What if this is 10 crore? I will give which opinion? Disclaimer of opinion. Straight away I will give which opinion? Disclaimer of opinion. 10 crore worth of customer is not traceable. I don't have evidence for that. I don't have evidence for that. I cannot say it is wrong. Adverse opinion means what? As a whole balance sheet is wrong. It is not correct. It is showing wrong picture. But can I say here it is showing wrong picture? With respect to 10 crore, do you say it is not there? See what is wrong, when it is wrong actually, suppose company don't have 10 crore customer, but company showing like that. You have proof that company is, this is a fictitious transaction, you have a proof. Or you have a proof that this is bad debt, still company showing in the balance sheet as asset. Then you can say company is doing this kind of misleading. But here what is the problem? Is it a bad debt? Or is it a fictitious? You only don't know. If at all the customer respond me, if at all I find the customer, I can then talk about that. Able to understand. But this is not fictitious. Only problem is I did not get evidence. Able to understand. Now, for a not only material, it is pervasive as a whole. Suppose no. Okay, let me think this way. I don't get evidence ultimately. Okay. What if, let me take risk. Let me take risk, ignore this 10 crore, I will give unqualified opinion. I will give unqualified opinion. But what if tomorrow, if this 10 crore is a fake invoice and the company is actually having 7 crore profit right now? What if tomorrow a fraud was discovered? This 10 crore is actually a bad debt. This 10 crore is actually a fake invoice. What if the mistake is discovered tomorrow? Which opinion you will give? If at all that is discovered today. If at all the mistake which you will discover tomorrow, if at all you discovered today, which opinion you would have given? Adverse. But I don't know whether it is true and whether it is really existing or not. So I will give which opinion? Let me not give any opinion. If at all this is wrong, I should have given adverse. But since I don't have any proof, that this is right or wrong, I don't have any proof, why should I give opinion on this as a whole? If at all this is wrong, I would have given adverse. Which means this is such a big item. This is entirely changing opinion on the people's mind. Such a kind of item, you did not get information, you did not get proof. When you did not get proof on such an important item, which will change the opinion of the people ultimately, why are you risking? Don't give opinion. Are you getting the point? Indirectly, what are they saying? If you are not getting evidence, if you are not getting sufficient appropriate evidence for material and pervasive item, then you will give which opinion? Disclaimer of opinion. Then you will give which opinion? Disclaimer of opinion. You see how the definitions were clearly framed. So now tell me, before I go further, modified opinion, we have 3 types. Okay, keeping that aside, we will give modified opinion 1. Evidence is there, mistake is proven. 2. Evidence is not there. Correct? Evidence is not there. In both the cases, we will give which opinion? Modified. In how many types we will give modified opinion? 3 types. Ultimately. In how many cases you will first of all come with modified opinion? Evidence is not there and it is important item. Evidence is there, it is important item, materially misstated. You see now. If auditor concludes based on sufficient appropriate evidence, financial statements as a whole are not free from material mistakes. Auditor, based on evidence, I have proof that it is bad debt. And I'm concluding financials as a whole are not free from material. As a whole, they are having mistakes. Material mistakes, but they're not free from material mistakes. Means what? Mistakes are there. Understood or not? All of you. Next. Not only that, another situation I'll give unmodified opinion. I am unable to obtain evidence. I am unable to obtain evidence to conclude financials are free from material mistakes. Are financial statements completely right? I'm unable to get the evidence. I'm unable to get the evidence. I'm unable to say they're completely right. I'm unable to say they're completely right. Why are you unable to say they're completely right? Because you're unable to get evidence. Able to understand. So in this case also we will give which opinion? Modified opinion. Now in how ultimately we will modify our opinion in these two circumstances. In these two circumstances we will modify our opinion. Now which modified opinion you will give? It depends upon the actual misstatement or absence of evidence. You see, we have given a table below. Suppose you have obtained sufficient and appropriate audit evidence. Have you discovered any material misstatement? No. Is it pervasive? The question itself does not apply. Not applicable. Which opinion? Unqualified. Have you discovered any material misstatement? Yes. Is it pervasive? So you will give. Have you discovered material misstatement? Is it pervasive? Adverse opinion. Sufficient appropriate evidence not obtained. When it is not obtained, can I use the word misstatement word? Can I use the word misstatement? Misstatement means what? It is wrong. Here evidence is ille. Evidence itself is not there. How can you say it is right or wrong? So, is it material? Yes. Now, evidence is not there, no? Tomorrow, what is the possible effect if it is went wrong? Okay, evidence is not there. Now you cannot say it is right or wrong. Let us take this, a situation. Tomorrow, what if it is wrong? At the time, is it material? Yes. And is it pervasive? No. In such a case, no. Whatever the item where you did not get evidence, no. Material item. Except that remaining part you give opinion. On that don't give opinion. So which means indirectly, when I am excluding some portion, what is that opinion is called as? Qualified. When I am saying everything is right except something means what? Qualified. Able to understand. Suppose if it is material and pervasive and I don't have evidence, then I'll give disclaimer. Generally, we will not give disclaimer of opinion. Whenever there is a necessity for us to give disclaimer, first what we will do, we will withdraw from the company. We will try to resign from the auditor's post. If resignation is not possible, then only we give which opinion? Disclaimer of opinion. Are you getting the point? Now you see how the definitions will come. First qualified opinion, if you understand, remaining two parts of the definition is dead easy. Now you see qualified opinion. The auditor shall express qualified opinion in two situations. You see in this table, in how many situations you are getting qualified opinion? When evidence is obtained, that is one scenario. Evidence is not obtained, here also qualified there. Yes or no? So qualified opinion came twice. Whereas disclaimer opinion came only once. Adverse. Disclaimer also came only once. Yes or no? Unqualified opinion also comes only in one situation. But qualified opinion will have two situations. And that's why you see, disclaimer of opinion only one para definition. Adverse opinion one para definition. Whereas qualified opinion has two parts of the definition. So one qualified opinion part of the definition is regarding evidence available, material misstatement discovered but not. Another part of the definition, evidence is not available but it is important item. Understood or not? But not pervasive. So if you are able to understand, now you read all the definitions, you don't try to remember, you remember naturally. Correct? Huh? Now you see, the auditor shall express which opinion? Qualified opinion when two cases, A or B. If any of these two cases exist, anywhere you can give opinion. What? Suppose if auditor obtained sufficient appropriate evidence, now you are concluding based on the evidence, you have a proof. Based on proof, now I can decide no, that misstatements are material but not pervasive to the financial statements. Now here you see the word individually or aggregate. What does it mean? Suppose no, in debtors I did not discover 1 crore mistake, but I discovered 20 lakhs mistake. In inventory I discovered 35 lakhs mistake. In outstanding creditors I discovered some 35 lakhs mistake. As a total, if you say 1 crore, it is material. So mistakes, no. If the mistake individually is a material mistake, then I will come and give qualified opinion. Multiple are there, all of that together also material only, but not pervasive. You see, misstatements individually or aggregate. Whatever applies, that you apply. If multiple mistakes are there, aggregate it. It's only 1 or 2 mistakes individually you see. Able to understand. If single mistake is there, what is a mistake? If it is multiple were there, total it. After totaling it, is it material? Check it out. Yes. Is it pervasive? Not pervasive. Then you will give which opinion? Financial. Which opinion? Qualified. Now you see here the word, but not pervasive is there, right? Here the word, but not pervasive is there, right? I will remove that word and keep word end. Then it will become which opinion? Exactly. The definition is exactly same. Able to understand. In qualified opinion, first part, before pervasive, if I remove but not word and keep end, what opinion will come? Adverse. Understood or not? Now you see the second part of the qualified opinion, which is little trickier. Okay. Now, the auditor is unable to obtain sufficient appropriate evidence. Some 1 crore worth of customer is there. I am unable to trace him. I am unable to get evidence on which I have to base the opinion. Because if we give evidence, if we give confirmation, I would have given opinion. But he is unable to give opinion. He is not giving confirmation. I don't have evidence. But I conclude that, okay, he is not giving. Can I take risk and give unqualified opinion? I want to take risk. But before I take risk, I need to calculate the risk, no? Tomorrow, what if this 1 crore is actually a fraud? I just look at tomorrow effect. Right now, I don't know. Is it fraud? Is it true and fair? I don't know. I don't have evidence. But what if tomorrow, if it is a fraud, what is the possible effect? What is the possible effect of misstatement? What if possible effect of misstatement? Misstatement actually there, huh? Is it actually existing? Undetected. You did not detect it. You did not identify. You are only talking about possibility. Yes or no? What if the auditor concludes the possible effect of undetected misstatements? What is the possible effect of undetected misstatements on the financial statements? What is the possible effect of undetected misstatements? If it could be material but not pervasive, then also don't give unqualified. That is possible effect is material, no future. If it is wrong, you have to give qualified, no, at that time. If at all it is wrong, you give qualified. But here, you don't know whether it is right or wrong. Then also give qualified only. Okay. On that item, don't give opinion. In the basis for opinion para, we will mention 1 crore worth of debtor, we are unable to trace him. Regarding this, we don't have any opinion. On the rest of the financials, they are true and fair. Now shareholders will ask management, why, what happened this 1 crore, all that. Are you clear? But on this 1 crore, I am not giving opinion. Why I am not giving opinion only on this 1 crore? Only that is what? Rest of the item I got evidence. Able to understand. Now suppose you see here, the word but not is there, right? Second part of the qualified opinion definition. If you remove that word here and keep end, which definition will form? Disclaimer of opinion definition will form. Understood or not? You need to observe every element like this. Don't blindly read. Are you clear? These definitions are very important for MCQs. These definitions are very important for MCQs. You see, if auditor is unable to obtain sufficient appropriate evidence and concludes that the possible effect of undetected misstatements could be material and pervasive, possible effect is going to be material and pervasive, then also we will give disclaimer of opinion. Material means what we all know. What is pervasive? When do I say pervasive? Mistakes are there only in one item. Can I say pervasive? Mistakes should be there in multiple items always. Not necessarily. Even if it is one item, if it is big item, we will give which opinion. I mean, it is pervasive. If it is even single item only, but it is very big item, then also it is pervasive. Suppose I have 1000 crore total asset. Investment itself is 900 crore. This investment I don't have evidence. Fixed assets are there, current assets are there, trade receivables, inventory, so many were there. All of that together 100 crore. Only investment value 900 crore. Total balance sheet 1000 crore. The investment ledger alone we don't have evidence. Remaining all are there. But this itself is substantial portion, correct? So, when do I say pervasive? Sometimes, generally, if multiple items are affected in the balance sheet and in the P&L, multiple items, fixed assets mistakes, inventory mistakes, receivables mistakes, cash and bank mistake, trade payables mistake, everywhere it is a mistake. Multiple items affected and the aggregate you felt not only material, you also felt it is misleading as a whole. Then you feel pervasive. Sometimes it may not be multiple, but it may be only one item. That one item could be substantial portion. Then also I will call it as pervasive. Or pervasive may be in relation to disclosures which are fundamental to understand. Suppose company has to prepare books of accounts using accrual, but they followed other than accrual basis. But they are showing in the balance sheet P&L notes to accounts that they followed accrual, but they didn't follow. Fundamental disclosures they are making and negative statements. They are giving false statements. You see the pervasive definition. Pervasive effect on those which are not confined to, not limited to specific item, specific account, specific item of financials. It is not one or two items, multiple items. Or, here it is or, if so confined. Okay, it is one item. Then do we say pervasive? It represents a substantial portion on the financial statements. It represents a substantial portion. First point, what are they saying? Pervasive means not in one item or two items. One or two items mistake, it is not pervasive, it is material only. Or if it is one or two item, if it is substantial portion, then it is pervasive. Or in relation to disclosures, fundamental for understanding. So if in these three, if they are making any mistake, then it is pervasive. Now you see, there is a question which can be asked like this. Write about decision by auditor regarding different types of modified opinion. How auditor will take a decision in order to decide about modified opinion. First one, nature of the matter giving rise to modification. First of all, why I want to modify? What is a matter because of which I want to modify first of all? Is there a material misstatement? Or is there, I am unable to obtain evidence for material item? What is the reason? Misstatements material or material item no evidence. But what is the reason? First, nature, you figure out. Then, judge about pervasiveness. Judge about pervasiveness of the effect of the misstatement. When there is evidence. When there is no evidence, possible effect of the undetected misstatement. When I say the word effect, it is detected misstatement. It is detected misstatement. When I say possible effect, mistake is not detected. Undetected misstatement. Understood how much in-depth meaning is there? Are you getting the point? So, first, what is the nature of the matter? Why you want to modify? Is there a material mistake? Or you are unable to get evidence or both? Anything might be there. Both can also be there. Inventory, material mistake is there. Debtors, I did not get evidence. Total tendency. Material. One MMS is there. There is another material item, but not evidence is not available. As a whole, is it pervasive? Check it out. Then also you'll give which opinion? Qualified. After discovering all the mistakes, simple, total the mistakes. Now what is the total impact? Material, yes, but not pervasive. Qualified opinion. Material and pervasive. Material and pervasive. You see, major portion is coming from misstatements or your inability to get evidence. Suppose if the major contribution for the pervasiveness is not getting evidence. Not having evidence is the main reason for pervasiveness. Then which opinion? Able to understand. All of you. Next. This itself can be asked as a question mark. Next. Now, here I have given some observations for your better understanding. When sufficient appropriate evidence is available, can we give disclaimer of opinion? When sufficient and appropriate evidence is not available, can we give adverse opinion? Simple logic. Adverse means what? Saying everything is wrong. In order to say that is not right, that is wrong, I need proof. People will ask me, hey, that is wrong. What is wrong? Tell me. I don't know anything about that. But I am saying wrong. Will people agree? Able to understand. So that's regarding various types of opinions. We'll look at how the paragraphs looks like. In the audit report, how opinion paragraph drafting comes. That is important for MCQs. Which is important for MCQs. Yeah, if you observe, this is a pronouncement book illustration. See, in SA 700, in pronouncement book, you are having some 5 illustrations. One is enough. Unmodified opinion, 1 illustration is enough. Because they will give illustration for fair presentation framework, how to give audit report. Listed entity, fair presentation framework, how to give audit report. Non-corporate entity, compliance framework, how to give audit report. Like so many were there. That and all we can't discuss in marathon. Getting a revision class, we can't discuss all that. If you want, I'll discuss, but I'll ignore some 5 or 6 chapters, no problem. Huh? That's why. Next. Illustration 1. Audit report on financial statements of listed entity. You see here, the auditor has concluded which opinion? Unmodified opinion. Now you see the format of audit report. What is the title? Independent auditor's report. Addressee to the members of the company. Now you see, there is a side heading came which we didn't discuss. We straight away discussed which one? Opinion. But what is this side heading? Suppose, no? All of you have seen advanced accounts consolidation topic. Have an idea at least. Now, if a company has a subsidiary company, or associate company, this company shall prepare consolidated financial statements as well. Correct? Now, the company is preparing 2 sets of financial statements. One is standalone financials. This company own assets and liabilities. This company own income and expenditure. Consolidated financials, my company and my subsidiary, my associate, joint venture, combined balance sheet, combined P&L. Able to understand? Like suppose, no, very simple, name an example. When you are like, in marriages and all, we see this. When there is a marriage going on, do we look at only the bride and groom, or do we look at the family as a whole? As a whole family. Yes or no? Same way here also, in company, Tata Motors you see. Only Tata Motors is excellent performing. Right now Tata Motors is having decent profits. But it has some subsidiary company called Jaguar, Land Rover and Range Rover, JLR. Now this company is facing too many losses. What's wrong? Tata company's parent, that is child. When child is suffering, who will support? Obviously, when subsidiary company is making too many losses, who will give them the loans, compensations, all that? Tata Motors. Okay, Tata Motors is earning super. But based on Tata Motors standalone performance, if I invest no money, but my whatever profits they are getting, they are not giving me. They are using it for Jaguar company. Revival. Yes or no? So even though company is performing super, the profits are going for this. So why will I get the profit ultimately? So I don't want to look at only your individual picture. I want to look at entire family picture. I want family balance sheet and P&L. And that is what consolidated balance sheet, consolidated P&L. Are you getting the point? This is total group picture. That's it. See, in Tata Motors, you are showing investment in Jaguar. So much investment value is there. But out of that investment, so much is loss only. So if you show me the combined picture, I will understand much better. Combined picture of Tata Motors, no, consolidated, the profit is lesser than individual picture of Tata Motors where the profit is higher. Able to understand? All of you? Next. So now when company is preparing two sets of financial statements, auditor shall give audit report separately on standalone financials. Audit report shall be given separately on consolidated financials. Now when you are giving two different audit reports, which audit report your audit report deals with? You should mention no. So here what they mentioned? Standalone. Are you clear? Now directly what? Opinion. We have audited the standalone financials of the company comprising balance sheet, P&L, so and so, all that first para. Now in our opinion, to the best of our information, according to the explanation given to us, the aforesaid standalone financials give the information required by the Act in the same manner required. Whatever Act says they are giving. And not only that, they are giving true and fair view in conformity with the GAAP. Are you getting the point? Now, you see here, I'm using the word and give true and fair view in conformity with GAAP, right? If this word is there, if this line which I highlighted right now, then this is fair presentation framework. What is this framework is? Fair presentation framework. If these words are not there, then that is a compliance framework. What is fair presentation? What is compliance framework? In Companies Act, what is recommended, what is mandatory is fair presentation framework. Companies Act 129 subsection 1, which talks about preparation of financial statements. What that section says, every company shall prepare financial statements by complying with the Schedule 3, by complying with the accounting standards, and shall convey true and fair view. Since the word Companies Act uses the word true and fair view, you must follow fair presentation framework. Suppose true and fair view word is not used, what will happen? Every company shall prepare financial statements as per Schedule 3, as per accounting standard. Suppose accounting standard is asking me to follow either SLM method or WDV method. But for my company, plant and machinery, both are not suitable. I have to follow units method. Production units method I should follow. But Companies Act is saying me follow accounting standard. Sir, that is not suitable, sir. That is not fair method. It doesn't matter. You follow SLM or WDV. That's enough. So if I have to blindly follow the law, even though the accounting treatment is not suitable for me, if I have to compulsorily follow the law, that is called which framework? Compliance. Suppose if they use the word true and fair. What is true and fair? You know what it says? Definition of true and fair. You always try to follow. You always try to follow the law. The financial statements prepare as per the framework. However, you can deviate. However, you can deviate for the purpose of achieving fair presentation. Suppose if you follow accounting standard, SLM, WDV both are not suitable for you. Both are not suitable for you. For you, production method is suitable. Production units method, that is not there in the standard. Example. Now, ignore the standard. Follow production unit method. Mention, give a disclosure in audit report. Give a disclosure in the financial statements, notes to accounts. That company followed production unit method which is not as per accounting standard because of the following reasons. That is called fair presentation. In fair presentation, I will deviate. See, there is a difference between deviation and violation. Now, in fair presentation, am I violating accounting standard? I am deviating for what reason? Fair presentation. If I follow units method, first year depreciation is actually 4 lakhs. But if I follow SLM, the depreciation comes only 1 lakh. Depreciation number is not reflecting the actual usage of the asset. Able to understand? So, SLM method is not correct because that is not fair method. That is not fair for me to show lesser depreciation. What is fair for me? I should show depreciation how much ever I used. That is fair on my part. Able to understand. Now, what is the difference between true and fair? True means the fact. Fair means reality. Getting it? Like simple example. Debtors were there. Debtors. How are we showing debtors in the balance sheet? How are we showing debtors in the balance sheet? Some 100 crore debtors were there. 5 crore doubtful debt was there. 95 we are showing it as asset. Yes or no? This is the balance sheet total asset, right? This is the asset we are showing ultimately. But tell me, honestly, correctly, truly, how much the company shall receive? How much company shall actually receive from debtor? 100. How much the company can receive? 100. But out of which 5 is doubtful, no? If I say 100 crore as my asset, out of which 5 is actually doubtful. Logically tell me, fairly tell me, how much company will receive? Company will receive only 95. Okay, I understand, the fact is 100. But fairly speaking, how much the company can realize? 95. This is fair value. This is fair presentation. Whereas this is true. Truly 100 crore I should receive. I will not show what are my true assets. I will show what are my fair assets. Fairly how much I will receive. That only I will show. Able to understand? That's it. That's the basic difference between true and fair. Understood all of you? Next. So that is regarding the unmodified opinion. Now we will see how modified opinion we will give. How modified opinion we will give. So for that we have to go to SCI 705. So SCI 705 we have again illustrations. This is qualified opinion illustration. Independent auditors report to the members of the company. What is the side heading they used? Whereas in the previous example, what side heading they used? Which side heading? Simply opinion. So when you are giving unqualified opinion, simple opinion is enough. When you are giving qualified opinion, side heading must be. Suppose if it is adverse opinion, disclaimer of opinion. Now you see qualified opinion. We have audited same matter. Now in our opinion, to the best of our information, according to the explanation given to us, okay, you see below, the aforesaid financial statements give a true and fair view. That is also positive opinion only, no? Qualified opinion also they are saying what? Aforesaid financials are true and fair. But there is some exception. Which means it is not absolutely positive opinion. It is conditional positive opinion. What is it? Conditional positive. What is a condition? Some exception they used. What are they saying? Except for the effect of the matter. There is some matter. Except that effect. Where the matter is mentioned, described in basis for qualified opinion section of our report. In our report only, in the same report, there is another section. What section? basis for qualified opinion section of our report, except that matter, the aforesaid financials are true and fair. Above financials are true and fair, except some matter given in basis for qualified opinion section, except the effect of that matter, rest of the matters are true and fair. What is the matter? The company inventory is carried in balance sheet at 100 crore. Management has not valued inventory at cost or NRV, 100 or 90, whichever is lower, but valued the inventory only at cost, which is actually a departure from accounting standard. Correct? Not only qualifying, you should also quantify what is the mistake value. Had management, you see, had management stated inventories, if at all management showed at whichever is lower, 10 crore, rupees 10 crore would have been required to write down inventory to their NRV. 10 crore I will reduce to NRV. And the cost of sales will increase by 10 crore, income tax will increase by so and so, income will decrease by so and so, shareholder funds will decrease by so and so. I should mention, if mistake is not there, how it will look like. Mistake is there already, how it is looking like we can see already in the balance sheet. Balance sheet is misstated, numbers we already saw. If this mistake is not there, what would be the reserves and surplus? What would be the profit? What would be the sales? That also you should show. Are you getting it? Which means quantification of misstatement is also compulsory. Understood or not? All of you. You see here we mentioned basis for opinion para when you give modified opinion. Suppose if there is a material misstatement, qualify. Sorry, not qualify, it's quantify. What is it? Quantify. The auditor shall quantification of effect of misstatements unless impracticable. You have to quantify. If it is not practicable to quantify, suppose 20 mistakes are there. Is it possible to quantify? Able to understand. All of you. Next. Now I will have to give one small example here. Suppose there is debtor 10 crore, there is creditor 10 crore and debtors also some 20 crore we have. 20 crore. What the company did, Company overstated creditor by 1 crore. Which means actual creditor is how much? Company overstated debtors by 1 crore. How much is actual debtor? Now, asset 1 crore increased, liability 1 crore increased. Can I set up both and say no material misstatement? Now, what is the total misstatement here? Exactly. 1 crore, 1 crore. How much it is? 2 crore. Let us assume. Creditor is overstated by 1 crore. Debtor is understated by 1 crore. Now tell me what is the total mistake? 2 crore only. Mistake will not have any sign. Getting it? 1 crore mistake. Here 1 crore mistake. That's it. Plus minus no symbol for that. Understood or not? Total is 2 crore. Total you should say aggregate material or not. Understood? Next. Next we will see adverse opinion, how it looks like. How it looks like, adverse opinion. Still, after we are only discussing opinion para, then we will discuss basis for opinion para. Understood? So just this one and disclaimer we will see and then take a break, okay? Now you see, adverse. In our opinion, to the best of our information, explanation given to us, you see here, the accompanying financial statements do not give true and fair view. Able to understand? We are straight away saying do not give true and fair view. Are we giving any exceptions or completely not true and fair? So the word except will not come here. Here it will come what? Because of significance of the matter discussed where? Discussed in basis for adverse opinion section below. Here I told you, here it is mentioned. Why auditor gave adverse opinion? This matter is there? No. Because of its significance, we are saying the aforesaid financials do not present true and fair view. What happened, the company has not consolidated one of the subsidiary. This is actually an audit report on consolidated financials. This is an audit report on consolidated financials. Now in consolidation, all the subsidiaries should be consolidated. All the joint ventures associates should be consolidated. Correct? Huh? But one important subsidiary is that I didn't consolidate. Now, consolidated financials, are they giving complete picture? Are they giving true and fair picture? One subsidiary company itself is not consolidated, which means which item is misstated? In balance sheet, which ledger is misstated? All the ledgers. Fixed assets will go wrong. Current assets will go wrong. Liabilities will go wrong. P&L, all the items will go wrong. Now tell me, can I quantify? Suppose if inventory alone mistake is there, I will quantify. This is the mistake. If this is not there, this much would be the profit. But fixed assets, all items mistakes. Current assets, all items mistakes. Liabilities, all items mistakes. Why all items were misstated? One subsidiary is not consolidated. So every item is understated. How can I quantify? So I cannot quantify. If auditor is unable to quantify, auditor shall state that. Getting it? That's what auditors mentioned in this adverse opinion. You see, the effect on consolidated of the failure to consolidate have not been determined. Auditor must have mentioned that he didn't determine. Are you clear? All of you. Now you see disclaimer of opinion. Now you see disclaimer of opinion. So disclaimer of opinion, if you observe here, the starting point itself, we were engaged to audit. They didn't use the word, we have audited. Why we are giving disclaimer? We didn't get any evidence. When you did not get evidence, where you verified? How can you use the word audited? You see, adverse opinion, it will start, we have audited. Qualified opinion, we have audited. Unqualified opinion, we have audited. Disclaimer, we were engaged to audit. Which means, what are you saying? We were appointed, but we didn't audit. Correct? Now tell me, here, straight away what they are saying, we do not express an opinion on financial statements. Why? Because of significance of matter described in basis for disclaimer of opinion section. Because of the matter, there is a below section in that I described why I couldn't give the opinion. Can I use the word in our opinion, to the best of our information, according to the explanation, no opinion? Can I say like that? What is your opinion? In my opinion, no opinion. Can I say that? I should straight away say I don't have opinion. Correct? That's what the wording, sir. All of you understood or not? Now, how basis for paragraph will wordings looks like in different scenarios? How auditor responsibility sections will looks like in different scenarios? All that we will discuss. We'll take slight break and then come back. Clear all of you?